Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited, and here is your weekly technical analysis of New York and London coffee markets. I'll start with New York coffee. Well, I could still once again prattle on about how the break higher through the top of what had been a prospective diamond pattern formed over November 2021 to July 2022 seemed at the time back in late August to be the beginnings of a significant move higher, but that seems irrelevant now. Instead, it was the subsequent fall from these highs and the test by the market down below the base of the Fibonacci support at 207.35 in early October that have been key to this market. You see, I had previously laid out two versions of the same idea. Thus, see the market hold in the 207.35 area and eventually pull back up, and you might have an unusual and controversial reverse head and shoulders pattern of sorts. However, fail at the 207.35 area, and I quote from 2 weeks ago, then perhaps, just perhaps, we can look again at this possible diamond pattern that was previously mentioned, and maybe, just maybe, it will become a very ragged, force breaking but large lopsided diamond pattern. End of quote. Well, the market seemingly decided in the middle of 2 weeks ago to follow the course lower and break down through the April 2021 to date uptrend, currently at 210.05. They've been acting as a proxy for this lopsided diamond pattern. So where does that leave us now? Well, the actual pattern, the lopsided diamond, is huge. It stretches from November 2021 to date and is an ugly looking pattern to say the least. It also includes the high of February at 260.45 and the low of July at 194.60. Assuming, and even now it is still an assumption, that this break lower is not a false break, I'll explain my thinking on this shortly. Assuming that this is not a false break, then the primary target X would be well below the bottom of my daily chart in the 166.75 area, whilst a secondary hard to achieve target X1 will be in the 142.40 area. Needless to say, given the size of the lopsided diamond pattern, these proposed targets below, assuming the break lower holds, are some longer term targets. There is one other fly in the ointment. Perhaps, just perhaps, this lopsided diamond pattern is becoming a big bear channel. If that was to be the case, then the first area to look at below would be the lower bear channel line of such a pattern. Currently this is in the 176.95 area, and that, or close to there, is where I would first look to see if this idea may be true. London coffee. Much like the New York contract, I could prattle on here about the market peaking at the end of August by reaching the secondary hard to reach target for the rectangle formed over March to June, and subsequently falling away lower the very next day. However, that is not the key feature or features here. There are two key relevant features here in relation to the fall in this market. First is a question I had posed about a few times already. It was whether the whole action from about early August until late September was a type of head and shoulders pattern. The answer was yes, yes it was. The neckline, currently at 21.48, was breached and properly broken 2 weeks ago. Since then, the market has broken down through all the remaining moving averages, as well as the 50% Fibonacci line of the August to December 2021 move at 20.64, as well as the middle time, currently 20.43, of the late December 2021 to mid-July 2022 bearish Andrews pitchfork. Plus, last week, the market plunged down and tested significant congestion zones split into a number of individual bands between 1968 and 2004. This week we've so far had a resumption of the move lower, a test down to the congestion at 1945. There is another important feature which I will deal with shortly. First, I wish to now draw your attention to the highlighted in red trend lines above, and my commentary, shall we say, from 2 weeks ago, and I quote, "It was whilst I was studying the supposed neckline that I saw another clearer pattern. It was a better fit for the recent action. I've highlighted the pattern in thicker red colour so that it becomes more obvious. It is a late August to date falling wedge pattern. currently 2089 to 2148. This pattern is very reasonable fit for the action. It has the requisite number of touches per side to qualify as a mature pattern. The question is whether the market will follow through. I cannot give a definitive target on either direction for this pattern, but I can give a primary size of the move should either one of the two trend lines above and below be broken. Primary move higher would be right now something in the order of $145 on top of the break of the upper trend line, whilst the break low would be something like $68 off of the break of the lower trend line. This is one to watch, and that's the end of the quote. Last week I made an assumption that the break low was a genuine break, as it had a primary target in the 2044 area, a target that was already been achieved. It now left the harder to achieve secondary target, and last week it did not look that hard to achieve. This was the feature I referred to earlier, and it is target X1 in the 1957 area. Today the market reached target X1 in the 1957 area. I'll give it a little time to see what the market does, and if the secondary, much harder to achieve target for the whole of that pattern, the harder to reach target X2 in the 1870 area, is feasible. Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final bit.